Good morning, everyone. Good morning. Hope you guys are doing well. Today is March the 18th. It's a Wednesday today. We do have we do have core PPI and of course the Fed meeting today at 2 p.m. along with Fed speaking at 2:30. It is going to be fairly important, as I mentioned. Really, that's what the market's waiting for. We did have a pretty big move in the overnight session once again. But as you can see, this one is about to fill its gap coming to market open. So expecting another New York session to be fairly calm until we do have, of course, the Fed speaking later today. So nothing else too much has changed. Before we head on to the charts coming into market open here. What's up, everyone? Good morning. Good morning, TW. Good morning, Ukraine, B Roots, Victor. Good morning, Andy, Cody, Marcus, Wisdom, P1, Lamit, Big Up, Chris, Deuce. Good morning, Robert, Leon. What's up, everyone? Cosmic, Graham, Julius, Monty. Yeah, what's up, everyone? Hope you guys are doing well. Let's get right into the charts. Actually, before we do that, let me pull up the economic calendar. Yeah, what's up, everyone? Hope you guys are doing well. What we have coming into market open here, as you can see for the economic calendar, we do have core PPI that is going to be at 8:30 a.m. Eastern Standard Time. We'll go over some charts, see how this affects the market, and kind of develop our game plan from there. But the main thing here today is, of course, going to be the FOMC statement. For the actual Fed meeting, we're expecting no rate cuts. So anything that's going to be a rate cut, of course, is going to be a big surprise, but most likely it is going to come in line with expectations. Not expecting a rate cut this time around. The main thing, of course, is going to be that FOMC statement plus the press conference, which is going to be at 2:30 p.m. Eastern Standard Time. So we'll see how this affects the market. With some more guidance potentially. Really for today, we're not expecting too much volatility pre-FOMC. We do have a couple gaps on the charts, which we could actually fill pre-FOMC. We'll kind of talk about that here, but majority of the times, right, before FOMC, the market isn't as volatile and there isn't as a clear of a direction until right after FOMC, until we have after guidance. Usually the best trades, to be honest, usually happen after FOMC or even tomorrow after that kind of volatility that we have. Sometimes it just kind of chops around, but a lot of the times the best moves always happen after. So I wouldn't be surprised if we actually don't do too much today and we have the big move right Thursday and on Friday as well. So this is what we actually have today. As for tomorrow, we have a little bit of unemployment that is going to be at 8:30 a.m. Eastern Standard Time. So with that being said, let's head right into the charts. I'm going to grab some water here as well before I get started. Okay. So as you can see right here, currently on the ES hourly time frame, overall markets really not doing too much once again. A couple big moves in the overnight session. Kind of similar to yesterday, right? Another nice pop here in the overnight session and quite a bit of movement here in the pre-market. A lot of times this is just going to set up for a choppier New York session open. So lately what's been happening is we've had tons of overnight movers, right? Pretty big action in the pre-market. So by the time the New York session opens, which is right primarily from 9:30 a.m. to right 11 a.m. Eastern Standard Time, by that time, the market's already had such a big move where normally, right, it's the complete opposite. Normally we have a lot of movement in the New York session, and then the rest of the day is quite chill in comparison, along with the after hours and the overnight session. But right now it's kind of the complete opposite. Big moves in the overnight session and then not too much volatility in the actual New York session itself from 9:30 to 11. The reason being is because we have a bunch of news, and that's what's currently moving the market, right? We're kind of in a news-based environment. And of course, we have the ongoing war, which is affecting the market. And of course, a lot of that has to do with, right, the overnight, and it usually doesn't drop, right? Any news doesn't drop within 9:30 to 11. But as for the key levels coming into market open, let's kind of mark this out. So what do we have here today? At least for the key levels that we have marked out, 67.90. That was a key level from yesterday. You can see price end up having a nice push towards the upside, right? Kind of tried holding this key level and then ultimately broke back underneath, and now just kind of consolidation. Reclaimed later into the day. Sorry, this was in the overnight session, and then a push back up and towards our previous day highs. Currently, as you can see, we are pulling back down in towards our previous day close, which is a key level here as well. So coming into market open, what we like to see for some upside, at least right off the bat, right within the first hour to an hour and a half, I'm going to be a lot more hands off today just because we do have FOMC. I'd much rather just not take any trades, right? Be more hands off and look to take trades at 2 p.m. and 2:30 p.m. Eastern Standard Time. So most likely going to be a lot more hands off in the New York session open, and then just going to come back later on the screens at 2:30. That is when Jerome Powell is going to start speaking, because there's going to be a lot more volatility here in the market. So for today, keep an eye out on our 67.80 if you are going to trade coming to market open. We do have a very small gap here in the charts, which we can look to kind of fill towards the downside. So underneath our 67.80, we can see a push down in towards that previous day close. And we do have a bigger gap as well, all the way down in towards our 67.40, which is down here on the higher time frames. If you look at, we'll kind of go into the spine cues here in a second. If you do want to see some upside, going to be a little bit more difficult here. It would have to be kind of the bounce play off for 67.80, or now you'd be looking for, of course, the reclaim back above our previous day highs. If you go into the SPY chart, let's go on to the regular trading hours first, because this gives us a little bit of a bigger picture here. But basically what we have is a couple gaps. So we have this gap up that we created here over the weekend. We have a gap down that was created last Wednesday. Another gap here as well yesterday that we tried filling towards the downside. Not a complete gap fill, but we end up having a gap down in towards the 669. So coming into market open here for SPY, we end up pushing up in towards our previous day highs. A little bit of rejection off this level, and now we're coming back down in towards that previous day close. So pre-FOMC, there's quite a few gaps that we do have here on the charts. I don't expect too many gaps to fill pre-FOMC. As I mentioned, a lot of the movement does happen after FOMC, but sometimes whenever we do have these gaps in the charts, we could look to kind of fill these imbalances right beforehand. So if we do want to see some movement here in the markets coming into today, let's keep an eye out on our 671. That is going to be key here. So if we go back onto the lower time frames, turn back on the extended trading hours, key levels that I have marked out is just going to be that 671. You can see multiple touches here. If we do want to see some downside underneath 671, we can see our previous day lows and potentially our gap fill all the way down in towards our 669. That's going to be the key level coming into market open here. Really only area I am interested in short, if you do want to see any sort of bounce play, right, bounce play here off our 671 for potential move up in towards our previous day highs. But as I mentioned, not really interested in longs, at least right off the bat, or price would have to have a really big push towards the upside above our 674. So these are the levels that we have coming into market open here today within the first 30 minutes to an hour and a half. As I mentioned, we just want to be a lot more cautious here just because we have FOMC later. If we go on to the NQ chart, the key levels that we have coming into today, sorry, let me just kind of remark this out. What we have here is our last week's highs, which is our 25,400. We have another key level here as well, which is just our Thursday's highs of last week. So you can see overall markets end up pushing nicely up into this level here in the overnight session. A little bit of sellers now stepping in here in the pre-market, and now we're pushing all the way back down in towards our previous day close. So coming into today, right, kind of similar story, big movement in the overnight session, and then coming to market open, really not expecting too much today until FOMC. So for the key levels today, Let's keep an eye out on our 25,000. That's going to be the key level. What I do expect, what's most likely going to happen coming to market open, is just markets bounce and then we just kind of consolidate in a very tight range until later today. And then after later today, right, we're going to have big spikes to kind of both sides. And unless we have, right, a clear direction, any sort of surprise rate cuts or whatever Jerome Powell says, right, that's going to be key. But I'm not expecting rate cuts today. So anything that we do have, right, it would definitely be a surprise if we do end up cutting rates or whatever Jerome Powell says, right, with extra guidance moving forward. But I do expect us to kind of stay inside this range until minimum FOMC is over. And then we could see a bigger move in the markets. But this is where I'm expecting the markets to trade coming to market open. So I'm not expecting too much today. If we do want to see, right, a push lower, as I mentioned, it has to be underneath our previous day close, along with our high that we created here on Monday. We can be looking for shorts right off the bat if that's the case. The next level really towards the downside is all the way down and towards that 24,800. So if we do break underneath, as I mentioned, this is very much well in play, but we already had such a big move in the overnight session and the pre-market as well. This is very unlikely pre-FOMC. As for the QQQ coming into market open here, very similar thesis. As you can see, we have tons of gaps here in the chart. We have a gap up, another gap up yesterday. We had this gap down that we created last Wednesday. As for the Qs, I could see this potential rejection and this gap fill, right? This is the closest gap that we're going to have on the charts. So your 600 is not out the picture coming into market open here today. So if we go back onto the extended trading hours, as you can already see, big move in the overnight session and the pre-market, pushing back down and towards that gap fill before the market even opens. If we do want to see any sort of move coming into market open, right, we have to see that break underneath 603, potential room down in towards our 600, which is that full gap fill as I mentioned. So this is very much well in play coming to market open. If the markets do just bounce, right, just be more cautious, right? I do expect most likely the markets to just be inside this mini range, right? 606 along with that 603. If the markets bounce right off the bat, right, as I mentioned, just come back later into the day if you are looking to trade. So key levels 603 coming into market open are Monday's highs. If buyers step in, right, just be a little bit more cautious here on the overall markets. Okay. Now let's go on to some other names here. The only names that have a clear direction on the higher time frames, of course, is the SMH, right? Some of the semiconductors along with some memory names that are really leading the markets back towards the upside. Now I'm going to go on to the SMH. I'm going to head on to the IWM and then we'll head on to some tech names. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Jack, for break and retest, reclaim or reclaim entry, is it necessary waiting for the 5-minute closure below or above or below the key level? I think I answered this question before, but if you're on the 5-minute time frame, right, you can be on the 1-minute time frame for entries, but that sometimes does cause a bunch of fake outs. So the best way, of course, if you're looking for a 5-minute reclaim, is just wait for the 5-minute candle to close. If you want a little bit more of a low risk entry, then you can go into the 1-minute time frame and then you can manage your position right on the 5-minute time frame. Can you make some more videos on futures? Yeah, futures is quite basic, right? There's not really too much to talk about on futures. All you have to do is just really focus on the futures chart in itself. There's no Greeks compared to options. So you're really just focused on the underlying. So whatever the key levels, if you're talking about just the strategies themselves or in the setups, very similar to what we personally trade, just a lot more kind of mean reversions, which actually I will be making a video this weekend on some more mean reversions since this overall market has been right? A lot of the times, instead of having that continuation above our key level, what's been happening is, right, fake out, and then we end up reversing back towards the downside. But this is very similar as the break and retest, but not a normal setup that we look for. But this has been happening a lot more often, is the actual reversal setup off our key levels, which in this case will be that 5-minute range high, right? Our previous day highs. Those are the key levels that we have marked out. But for the SMH, as you can see here on the higher time frames, let's go back onto the 15-minute. As you can see, SMH, nice kind of push towards the upside. Key levels that we will have marked out. Let's just kind of readjust this. Previous day highs, drag this down. Key level is going to be that 397. Nice kind of pop in the overnight session. And now you can see a push back down in towards that previous day highs. So coming into market open here, if we do want to see any sort of upside here on the SMH, the bounce off our 397 is key for any sort of push back towards the upside. If we break underneath, we can see this continue push lower. So key level, previous day highs coming to market open 397. As for the tech names, let's just kind of go on to some of the names that we have coming into today. Number one, Tesla. So as you can see right here, really not too much to talk about. A lot of consolidation. That's just because the Qs is right inside this range. I know we've talked about this quite a bit now, is we're waiting for that range break on the QQQ. If you could even just wait until the market breaks outside this range to take any trades, because it has been fairly difficult with a lot more mean reversals in the market. So as you can see here, Qs just dead smack right in between the middle of the range. Until we can break outside this range, you just want to be a little bit more cautious. As for the levels, we just end up filling this mini imbalance back on the daily time frame. As for today, key levels that we're going to have marked out is going to be that 603, multiple touches on Friday, Monday, and you can see yesterday as well. So key levels that we have coming into today, 603. If we do want to see some upside, potential bounce off 603, you can see room back up in towards our 606. If we break underneath, coming to market open, potential room down in towards that 600 and below. What is the most likely scenario here for the Qs is the range in between that 603 and that 605, right? I do expect a lot more tighter consolidation coming to market open. Really, in my opinion, you don't want to be trading in between 605 along with that 603 today, at least during the New York session open, just because we do have FOMC later today. So I'm expecting some consolidation earlier into the day, and then later into the day, we're going to have big volatility right after FOMC, and that's when we're going to be looking to take some trades right after. Should be back. Can you guys hear me and see my screen? We should be back here. Stream should be all set. We'll be back. Good. Yeah. If you guys have any issues with the stream, you guys can always reset it and it should be all good, or you can refresh the stream. So it's better to wait until 2 p.m. Eastern Standard Time. So yeah, if it's your first time trading pre-FOMC, it's best to wait for, of course, 2 p.m. Eastern Standard Time. Or it's best to even avoid, the whole day in general, just because there's going to be a lot of volatility, but I don't expect a clear direction. So if you are trading, let's say coming to market open, very light size, and you're going to be, you're just going to look for quick scalps in the market, because no one's expecting the markets to move that much pre-FOMC. We could see a potential couple gap fills towards the downside. Plus, the overnight sessions have had the biggest moves. And as you can see, we've had very tight ranges. You can see overall market, big move in the overnight session, and then all of a sudden, the whole New York Open, very tight range. Another one, big push up in the overnight session, New York session, very tight range. Today, another big move in the overnight session, expecting a little bit of a tighter range coming to New York Open until FOMC. So it's been a lot more trickier to trade, especially during that New York Open. Plus, we have FOMC today. So as I mentioned, if you are going to look to trade, be on lighter size. We've been trading on lighter size just because there hasn't been nice moves in the overnight session. right? In the New York Open, you might have a couple nice trades here and there, but really not too much continuation that's really worth it. The VIX is still somewhat elevated. So, right, essentially what's been happening, especially if you're going to hold on to trades and why it's been more difficult, is because number one, the VIX is elevated. So the VIX is greater than 20. So we're expecting big moves in the market. So all these big moves have been actually happening in the overnight sessions. So that's when the biggest moves occur. So by the time New York Open comes, right, the overall market's pricing in big moves. So if you're trading during the New York Open and none of the big moves happen, right, ultimately it's going to be very hard to make any sort of money, especially if you're trading right off the bat, is because number one, overall markets are pricing in big moves, which have been only happening in the overnight. So during the New York Open, if nothing happens, right, your contracts are ultimately, right, the IV's already elevated, so your contracts aren't going to move as nice. Plus, the New York Open, there hasn't been any big moves regardless. So you're ultimately, right, it's just going to be very tricky to make money at the New York Open. So it's much better to be a lot more defensive in this market, right? Size down coming to market open, right? If you are going to trade, right, trade on lighter size and just look for quick scalps, right? Hive day, potential pops above hive days, scale majority of your position, and just base hits, right? Base hits until what? Until either FOMC, which is tonight, right? I'm expecting a big move after the news. So the big move can happen right after 2 p.m. Eastern Standard Time. Where of course we have Jerome Powell speaking at 2:30. So the initial reaction, we're gonna have a nice pop at 2 p.m. And then of course at 2:30 p.m. when Jerome Powell starts speaking, when we have more guidance in the market, that's when we're gonna have a nice big pop. And of course tomorrow, Thursday, a lot of times the bigger moves happen the day after FOMC as well. So if nothing happens today, that's fine because now we have more guidance in the market. And then a lot of times, right, the moves actually happen after. So tomorrow is going to be a really big day. And then of course, later today is going to be fairly big as well. But let's go back on to some of the names that we're looking for coming to market open, but just a lot of consolidation. So really not too much to talk about here, right? As you can see, seems like my keyboard got messed up, but oops. I guess my drawing tool, 1 second. All right, it should be back. So yeah, at least for today, as you can see for NVIDIA, just a lot of consolidation, right? A big move is going to come in the markets. You can see a lot more consolidation right in between the middle of the range. You could even draw something out like this, right? You can expect a big move to happen fairly soon on a bunch of these tickers. Even AMD, very tight range right in between the middle. So a lot of these ones are about to have a very big move, and of course it is going to happen with it is going to line up with the news events plus the technicals here. So see a lot of these tickers just kind of consolidating in general areas. We are going to be a little bit more cautious here. We did just have some core PPI here as well, so we'll take a look at that. Okay, so we just had some core PPI coming into market open. Forecasted 0.3, actual 0.5%, PPI month over month 0.3 as well, 0.7%. So coming to market open, currently the market is having a little bit of reaction. We're just kind of right back down in towards our previous day close. So yeah, very similar thing. Just be a lot more cautious coming into market open here. Very similar to yesterday. Right, pretty big move in the pre-market, and then coming to market open, you have that first initial pop, which you can look to capture. So if you can capture that kind of first initial move, right, fantastic. Right, besides that, don't look for a continuation after that first initial move. Kind of similar to today. If that first initial move heads lower, right, you can look to try and capture this move down in towards that 601. Right, if you can capture this, great. If not, just be a little bit more hands off because I will expect, right, just kind of a mini reversal and then just kind of consolidation after that. So the first initial move is something we can look to trade. But as I mentioned, regardless, we're just going to be a lot more cautious. Similar thing here with SPY, right, kind of dropping underneath that 672. Actually, a decent amount of things. You can see how big of a move we had in the pre-market plus overnight session. right? Overnight session pushed up and towards that previous day highs, took this out, and now in the pre-market, all the way back down, actually underneath our previous day close, underneath our key levels here as well, which is our previous day lows. So we basically just went from our previous day highs all the way down into that previous day lows before the market even opened. So by the time the market is going to open, right, there's not really too many objectives left, right? We just have to be a lot more cautious here now because we took up both sides, previous day highs and previous day lows. As I mentioned, really the next main objective is just going to be that very small gap fill, which seems like this one's actually about to fill coming to market open here as well. So a very small gap fill, which, right, we're most likely going to fill on SPY. And now we're actually going to have a gap up that we created. So most likely, be very cautious. We're going to have a gap here back towards the upside. And then, of course, we have this big gap here as well, which was over the weekend. So quite a few gaps that you should have marked out on your charts coming into today. As for the QQQ, right, similar thing. We do have a little bit more room towards the downside, which will be that full gap fill 600. If we can get underneath that previous day lows, potentially we can see that gap fill 655. But as for today, as I mentioned, just be a lot more hands off in the markets. We're just going to kind of base it off of intraday price action. The best the best play is to wait for FOMC, which is at 2 p.m. Eastern Standard Time. Someone's mentioning in the chat, would it be smart to trade pre-FOMC? As I mentioned, you can trade pre-FOMC. Just make sure it is on lighter size and be more quick to take profits pre-FOMC, just because we're not expecting as clear of a direction. If you wait until 2 p.m., right, there's going to be a lot of volatility. Of course, after 2 p.m., which Jerome Powell speaks at 2:30, right, that's when a lot of the volatility is going to kick in. And then, of course, tomorrow is when we're going to have a bigger move after FOMC, of course. But at least for today, my game plan is just to focus on the major indices themselves, right? SPY and Qs off key levels 672. Qs is going to be the 603. As for everything else, basically the exact same levels that we had yesterday. Nvidia, this one potentially could see some more downside, so we'll keep an eye on this underneath our 181. Interested in a push down and towards that 180. We also did create a gap here as well. Plus, we had some news a few days ago. So potentially NVIDIA is employed down and towards your 180 today. So we'll keep an eye out on NVIDIA for some downside. At least, besides that, yeah, just be a lot more cautious. I'm going to be more cautious until FOMC, and then we'll kind of develop our game plan. We have some earnings tonight, MU, which is going to be fairly important. This one had a gap up. A couple memory names leading the markets higher, right? MU, SNDK, Western Digital. These ones have had nice moves towards the upside. But yeah, besides that, just be a little bit more cautious. We're going to have MU earnings in the after hours as well. So really tomorrow, I'm expecting some nice price action to later today, of course, after FOMC. We'll see what Jerome Powell says. That's going to be key. We are expecting no rate cuts. So anything that we do have, right, if we, let's say we have surprise rate cuts, of course, that's going to affect the market drastically, or any sort of guidance that Jerome Powell says later today is going to be fairly important. But yeah, that is going to be it for me today. I'm going to call it a session here. Tomorrow is going to be fairly important. So yeah, we'll talk to you guys all then. All right, take care, everyone. Have a great rest of the day. Peace.